Okay, but let's shift focus and let's discuss what's going on with the insurance sector. And who better than Amitabh Chaudhry, the MD and CEO at HDFC Standard Life, and again to throw some light on the prospects of the sector and where is it that one can find value as investors. Amitabh, morning, good to have you on the show. You know, so far we've seen very strong earnings from most insurance companies, Amitabh, with very strong premium growth, strong VNB margin expansion. Do you see that this earnings growth trend is going to continue up until the next financial year as well?
Well, one has been stating for quite some time now that the runway for growth for the insurance industry looks quite solid from here on. I think it was expected last year that post demonetization in 16-17 the growth in 17-18 would be muted, but I think the industry has proved everyone wrong. At least the private sector continued to grow at a very rapid pace and clocked a growth of about 24% odd on the individual WRP basis. Even the other parts of the business for insurance industry is growing quite healthily. So I do believe that in the next 5 to 7 years, the runway for growth is solid. Obviously, it all depends on how well the insurance companies execute their growth plans and how they are able to capture market share at the cost of other competitors or the large incumbent LIC. But overall, the market growth looks strong. Please understand the number of factors which are driving this. One is obviously the growth in the financial savings space, but over and above that, I think the insurance products have become extremely competitive. A lot of innovation has been brought to the market. The customer value proposition has gone up. So as a result, generally the growth is also coming back in a significant manner because of the basic foundation seems to be extremely strong.
Morning, Nikunj also joining in, Amitabh. Let's first talk about the big divergence within the industry. One, you have the ULIP space and then you have the non-ULIP space. The ULIP space has done rather well because stock markets have done well. But when market volatility is back, do you think the ULIP space could see outflows and there could be a challenge in at least the ULIP business?
Well, you know, people do talk about that potential risk out there that if the markets are not to do well, then, you know, you could see a bit of a dampener as far as ULIPs are concerned. Please understand and appreciate that on an average, while the mutual fund industry is garnering upwards of 20,000 crores per month, the life insurance industry on an average garners only 5,000 to 6,000 crores. And out of that, the ULIP sales in that 5,000 to 6,000 crores is not such a large number. So if tomorrow, firstly, if the markets were to go the other way, I think the industry which needs to worry more is the mutual fund industry, not the life insurance industry. Second, even within the life insurance industry, there are some players who have maybe a higher proportion of ULIP sales, but there are players like us who have a more balanced mix. And as a result, if tomorrow the ULIP sales were to get impacted, if they were to get impacted, I think we have a lot of other products out there which can easily support us through a downturn in the market. We also, please appreciate that when the ULIP sales or the new business sales are not happening, we also see lower surrender. So there is a balance which exists in the market, and as the mutual fund industry has been giving that message for quite some time, that a downturn in the market actually is a good time to actually continue to invest rather than get out. So I think the Indian investor itself is also becoming more savvier than in the past. But yes, the risk of a huge negative turn in the market and what impact it could have on the insurance industry cannot be completely removed from the table, and all of us are obviously working very hard to ensure that if it were to happen, I hope it does not, but if it were to happen, the impact on our new business and our renewal premium growth is muted at best.
You know, but since we're on the subject, where do you think you know, growth will come in faster? Would it be ULIPs or would it be protection products? Where is it that you see faster growth kicking in?
Well, you know, it all depends on the market. Today, the ULIP sales is easier to execute on because that gives you a certain transaction size. Please understand, you know, you can sell one ULIP product and for you to get the same kind of volume, you have to sell 5 protection policies. So in a way, they are comparable, or in a way they are not, because while you might try to do a lot of protection business, you need 5 times the volume to get to the same level as what you might get in a single ULIP policy. So from that perspective, today, in the way the market is behaving and how well the market is doing, ULIP sales are easier. So you have seen a kind of clear pendulum swing towards the ULIPs. Tomorrow, if the markets were tougher, yes, the pendulum could still swing to more non-par, guaranteed return kind of products. And obviously, protection will continue to grow at its own pace because it's got nothing to do with the market. And yes, you might see the pendulum swing towards in that direction. There are a lot of other, you know, innovative products being brought about by the life insurance industry, both in the health space and the annuity space. And a lot of work is also happening on the credit protect space. So I think the Today, every company is not just trying to sell one product. They have 6 or 7 different kind of products which are addressing different needs in the marketplace. And yes, if you have reliance on one product, it could impact you more, but there are other products being sold and sold quite well, and the market space is expanding for those products. And I think it's a matter of time when ULIP would not remain such a substantial part of our story. It is today, but it will, I think, in the next 5 to 7 years, I think the impact of ULIPs will definitely come down, because you'll be selling many more products than just ULIP alone.
There are 2 ways how insurance companies they sell products, through the agency channel and online. What has been your experience? I mean, we are talking about digitization, we are talking about digital data tracking individual customers. Are you getting a sense that the agency channel is still going to be a vibrant channel, and online sale model, even though it is going to be more effective and more cost effective for an organization standpoint, is going to be, will grow, but it will not be a needle moving contributor for insurance companies?
So let me state a couple of things. First is that for most of the private players who are doing well and who are large, bank insurance is the biggest channel, not necessarily agency and online. But if you were to compare agency and online, both are proprietary channels. And as far as agency is concerned, at least for the large companies, it is a profitable channel. If you take HDFC Life, for example, our agency channel is as profitable as any other channel out there. Frankly, it is even more profitable than our bank insurance channel, because we have worked hard at it and taken it to a point in terms of an operating model where it works for us very well. Because it is a proprietary channel, I think strategy demands that we invest in that channel as much as we can to grow it to a much larger size than what it is. And we have an example in front of us in the form of LIC, which has been a very successful player on the agency side. So it's not that the successful large-scale models don't exist. It's a question of how patient you are, how much you're willing to invest, and how long are you willing to sustain losses, at least for some period of time, to get it to a scale where it will become much larger than what it is, for example, for us today. We are today, agency accounts for 11% of our business. We want to take it to at least 25 to 30% of our business. We know it will take a long period of time, but we believe that is possible, and that's why we're investing a lot of money in that. As far as online is concerned, while it appears cheap, it is not that cheap, because the amount of money which you have to spend with the Googles and some of the web aggregators of the world, it is not as cheap as it appears. It is, the cost is, has a very similar profile to a lot of the other channels. But yes, because online channel, the dominance of protection in the online channel is very, very high, or the share of online protection is very, very high. It tends to be more profitable because the protection products are more profitable by nature. But the cost of acquisition of online channel today, even though one might believe it is low, it is not low, because you do end up spending money in terms of marketing on various websites, web aggregators, getting the customer through the doors. Invariably, it is not no-touch customer. Invariably, the customer falls on the floor, and then you have to pick up and call the customer, reach out to the customer, meet the customer. So while the entry of the customer might be through an online channel, invariably it requires an offline process also to close the sale, and so the cost of acquisition is not as low as one would assume. Yes, as products become more commoditized, as it is easier to manage KYC, AML, underwriting norms, all on an online basis, and you don't have to meet the customer for that, I think the cost of channel will come down. So you will see that the industry generally is spending a lot of money and resources to make the whole experience more seamless, use digitization to cut the number of processes, use digitization which can prevent somehow this offline process which have to be executed. And as that picks up, as we're able to make the whole process more and more online and more seamless, the cost will come down, and yes, online channel will be the channel of the future, which all of us are investing on.
I'll ask you a very simple question, and when I speak to investors, fund managers, and when I ask them, what is your view on insurance? The answer which I get back is that it's a very nascent sector. हमें पता नहीं how to value the insurance sector. Every company has a different model. Every company gives a different data point. Now, insurance as a sector has got created in last 12 months. Reinsurance, insurance, general insurance. So for someone who, let's say, says, look, I want to invest in insurance stocks, but I don't know which are the data points I should look at. So let's hear from a manager. How should one understand the insurance sector, and which are the data points which one should look at to decide which insurance company is a good investment or not a good investment?
Well, I will get into it straight away. You could just give me 1 minute. The point is that if you look at the IPOs that have been done over the last 16 to 18 months or so, you will see that it has preponderance of large foreign institutional investors who are investing in insurance stocks globally. So there are smart investors who are investing in these insurance stocks. They invested during the anchor rounds of some of these IPOs, they invested in the IPO, and then they've been investing in, say, at least we know of our company, investing in our company consistently from November onward. So firstly, I think the investors who are investing in insurance do understand that space. We have been going to the market and talking about 6 or 7 financial parameters which we believe are important for us, which we want to deliver on a consistent basis. The things which we talk about, obviously, is the growth in our overall premium, growth in our individual premium, growth in our group business, growth in our protection share of the overall business, etc. So growth is one parameter we talk about. Over and above that, we talk about our new business margins, we talk about our return on embedded value, we talk about our return on equity, our persistency ratio, our solvency margin, and Indian GAAP. So these are the kind of 7 parameters which we talk to the investors about, and we have kind of laid benchmarks where we want to see these parameters move over a period of time. Now, we believe these parameters encapsulate a lot of other things in the business in terms of how the quality of the business is. It requires us to go and invest in new channels. It requires us to go and find new ways of delivering a service to the customer or selling to the customer. It requires us to go and find new niche areas where insurance industry has not gone into. So kind of all of them get amalgamated, and we believe in these 6 to 7 factors, and that is how we would like investors to look at us. I think they have reposed some faith and confidence in us since our IPO. But yes, our share price and how we do in the future will all depend on how do we execute on some of the parameters we talk to the investors about on an ongoing basis, and how well they move in the right direction over a period of time.
Okay. All right, Amitabh, appreciate your time and thank you for joining us.